So you've saved up a bit of cash, and now you're ready to put it to work. But here's the big question. Where do you put it? It's like being at a buffet with only two dishes, stocks and real estate, but you can only choose one. Sounds like a tough decision, right? But don't worry, that's what we're here to discuss today. We'll dive into the details, check out the pros and cons of both, and help you figure out which could be a better investment for you. Picture this. You're a co-owner of Apple, Amazon, or maybe Tesla. Sounds glamorous, right? Well, that's essentially what you're signing up for when you dive into the world of stocks. Each share you buy is a tiny piece of ownership in a company. Now, let's imagine it like a thrilling game. Each player enters the stock market arena with thousands of companies to choose from. It's like a massive supermarket, but instead of shopping for groceries, you're shopping for businesses. You browse through the aisles, evaluating each company, studying their performance, growth prospects, leadership, and more. Finally, you pick the ones that catch your fancy, hoping they'll grow and bring you a tidy profit. And if the company you've invested in strikes gold, you're in for a wild ride of skyrocketing share prices. Imagine owning a share of Amazon back in the early 2000s and seeing its value multiply manifold over the years. That's the thrill of the stock market. It's the prospect of such massive growth that attracts millions of investors worldwide. But it's not always a joyride. Just as your chosen company can have a winning streak, it can also hit rough patches. Maybe it's a product launch that didn't go as planned, a scandal at the executive level, or just a bad economic phase. In such scenarios, your once shining shares can plummet, causing you to lose money. Let's break this journey down into pros and cons. Pros of stocks. 1. Liquidity. Here's where the stock market shines. Need cash for a sudden expense or opportunity? You can quickly sell your shares and have the funds in your account within a few days. That's liquidity, and it's one of the main attractions of investing in stocks. 2. Low entry cost. You don't need a small fortune to start your investing journey. You can dip your toes into the stock market with the price of a decent dinner out. With fractional shares becoming more common, you can even own a part of your dream company without breaking the bank. 3. Passive income. With certain stocks, you don't just make money when you sell them for more than you bought. Some stocks pay dividends, which are portions of the company's earnings distributed to shareholders. It's like getting a small thank you check for being an investor. Cons of stocks. 1. Volatility. Just as a company's share price can climb Mount Everest, it can also dive into the Mariana Trench. External factors, market sentiment, economic indicators, and a multitude of other factors can cause wild price swings. 2. Complexity. You can't just pick stocks out of a hat. Well, technically you can, but that's not a recipe for success. You need to understand financial statements, market trends, company health indicators, and more. It's not rocket science, but it does require time, patience, and a fair bit of learning. 3. Lack of control. As a minority shareholder, your voice in the company's affairs is minuscule. You won't be sitting with Elon Musk to discuss Tesla's next big move. You are essentially putting your trust in the company's management to make the right decisions. Now, let's step into a different realm, a world that's a bit more tangible. Picture owning a house, an apartment, or maybe an entire office building. Sounds like a different kind of thrill, doesn't it? That's the charm of real estate. Unlike stocks, which are virtual pieces of a company, real estate is a tangible asset, a piece of the earth that you can call your own. When you invest in real estate, you're like the king or queen of your domain. You have direct control over your investment. You can renovate it, rent it out, sell it, or even live in it. And while you're at it, you can earn money in the form of rent or enjoy the property's appreciation over time. Imagine having a property that you rent out. Every month, like clockwork, you have money coming into your bank account. That's the beauty of rental income. Or consider buying a rundown house, fixing it up, and then selling it for a tidy profit. That's the art of flipping houses. But as with any kingdom, running your real estate empire also comes with its challenges. Perhaps the property you bought isn't appreciating as quickly as you'd hoped. Or your tenants aren't as timely with their rent payments as you'd like. Or maybe that cute little cottage you bought needs a new roof, a plumbing overhaul, and a termite treatment, all eating into your profits. Let's dive deeper into the pros and cons of this tangible asset class. Pros of real estate. 1. Stable cash flow. When you rent out a property, you create a steady stream of income, which can be a great supplement to your regular paycheck or even a significant source of retirement income. 2. Appreciation. While not guaranteed, real estate generally tends to appreciate over time. That property you buy today could be worth significantly more in the future. 3. Control. As the owner of the property, you have full control. You can decide when to buy, sell, renovate, or rent out. You make the rules, and that's a kind of power that stocks can't offer. Cons of real estate. 1. High entry cost. Buying real estate isn't cheap. You typically need a substantial amount for a down payment, and then there's the mortgage, closing costs, and so on. 2. Less liquidity. Unlike stocks, selling a property isn't as easy as clicking a button. It can take weeks or even months, depending on the market conditions. 3. Maintenance and management. Real estate isn't a buy it and forget it type of investment. Properties need maintenance. Tenants need managing. Taxes need paying. All these responsibilities can take up time and money. In the end, real estate is like playing a grand strategy game. It's slower paced than stocks, requires more upfront investment, and comes with its fair share of challenges. But it also provides the joy of tangible ownership, a stable income source, and the potential for significant appreciation over time. So, we've journeyed through the adrenaline-fueled world of stocks and walked the tangible path of real estate. You've seen the thrills, the spills, the pros, and the cons, but the million-dollar question still lingers. Which is a better investment for you? You see, there's no one-size-fits-all answer to this. It's like asking if you should wear a suit or a casual dress to a party. It depends. What's the occasion? What's your style? What are you comfortable with? Similarly, choosing between stocks and real estate depends on several factors: your financial goals, your risk tolerance, the time you're willing to commit, your expertise, and even your personality traits. 1. Your financial goals. Are you saving for a rainy day, planning for retirement, or aiming for financial independence? Stocks, with their potential for high returns, can help you grow your wealth faster. But remember, with greater rewards come greater risks. On the other hand, real estate can provide a steady cash flow and gradual appreciation. It might not make you a millionaire overnight, but it's more likely to give you a steady income, especially if you're considering rental properties. 2. Your risk tolerance. Are you a thrill seeker, ready to ride the roller coaster of the stock market? Or do you prefer a slower, steadier pace? Stocks can fluctuate wildly, and while they offer high potential returns, they can also lead to significant losses. In contrast, real estate is often viewed as a safer bet. While property prices do fluctuate, the volatility is usually less than the stock market. Plus, the physical nature of the investment offers a sense of security that intangible stocks don't. 3. Time and commitment. If you're someone with limited time or simply don't want to invest much time, stocks may be the better choice. Thanks to online trading platforms, buying and selling stocks can be done in seconds from your smartphone. But real estate? That's a different ballgame. From property hunting to securing financing, from dealing with tenants to handling maintenance, real estate demands time and effort. In the battle of stocks versus real estate, the winner isn't an absolute. It's more about what fits your financial situation, your goals, and your lifestyle. It's not a one-size-fits-all answer, but rather a tailored suit, custom fit for you. And with that, we wrap up today's video. If you found this video helpful, make sure to hit the like button. And to keep up with more investment insights, don't forget to subscribe to our channel. Until next time, keep investing, and may the market forces be with you.